What's going on, everyone? My name is D. Anthony with evolutiontraders.com. We are taking a technical analysis look at Tesla. Tesla is one of my most favorite stocks to trade, along with Nvidia, Apple, AMD, so forth. Kind of looking at today's price action. So starting off, we're looking at the daily time frame here, currently trading at 182.83, up 1.5% on the day. Now, this price action for the past 5 days is getting extremely tight. We have our clear definitive line in the sand here at 176. Anything below 176 is an easy test of 174.5, which is that 50-day moving average. This is going to be our concrete level here for support. Now, if we do close below at any point in time this week, next week, whenever, below 176 and 174.5, that is your indicator to get short here with a price target of 168. Clean it up there. Next price target would be 163, and anything below that 150. Just have to kind of mark out those levels. But Tesla is holding the middle of its range here. They were coming in for $190 calls all this morning here. Next week's expiration, you can kind of see why those 190s are coming into play here. That is the linear regression top channel here, this blue line that I'm kind of dragging my cursor over, as well as the 20 SMA, which is the purple line. So 190s looking to play into that this week, into next week, and any close over $190 would start that breakout leg, right, to try to get back into 205, 211, and obviously start to move towards that 200-day moving average and kind of cleaning up this most recent top here at 217.55 going back to February the 16th. Anything over 217, you know the market's going to run, right? 2 or 3 months. Right now, the market has been holding up exceptionally well. If we do take a look at the NASDAQ futures here, NASDAQ futures kind of been trading within inside of a range here between 12,941 and down to around 11,797, going all the way back to the beginning of February. So we are back up here testing the top of the range. The longer we go sideways, guys, the bigger and more potential we have at breaking out for another leg up or another leg down. So if we were trading down towards the bottom here, I would say that, once we start to lose this 200-day moving average and lose the bottom of this channel here, we would be looking to test 11.7s and then coming down here to 11.3s. But that's not the case. We're holding the top of the range, so we do give the bulls the benefit of the doubt. If you're looking to be shorting now, all you're simply doing is playing the guessing game. Sometimes you get right, and it's when you get right, when you put on a guess bet, is when you start to do that over and over and over, and then that's how you get crushed. Just allow the charts to set up and take the moves as they come. React to the price action here. Now you can see going into tomorrow, if we're able to take out Friday's highs here, that's going to probably start that next push higher. A lot of traders are going to be waiting for Jerome Powell to speak. I believe he's speaking on Wednesday, so the market's going to need to digest and see kind of what's going on there. But we do also have the Dow up over 200 points today. We've got the S&Ps green. So is the market shaking off the bad and horrible news of all of these banks? I can't even get on Twitter anymore. And the reason why I can't get on Twitter is because I see everyone under the sun acting like they know something about the financial industry, everyone giving their opinions on, this is just a bull trap, this is a bigger problem here in the US economy or not. Guys, forget about all that noise. While you're worrying about all that noise and trying to short the tops here, you're going to be ending up losing money and then potentially, risk getting in from the ground floor, right? If this does go. If it doesn't go and there is a bigger problem here, we're going to see that if we just follow the charts here. If we do lose a 50-day moving average and a 200-day moving average, we're going to clearly see that. We're going to clearly see that the banks are going to have a major impact on the markets. But as of right now, the bulls are doing a phenomenal job holding this up here. So if we do look at the S&P 500 very, very quickly here, which is being affected pretty heavily by the banking sector here, you can see we're holding the bottom of this range 1 2 3 4 5 6 days, realistically 7 8, since this kind of the whole pandemonium kind of kicked off. We're holding the bottom channel here on this LR50. Now you can clearly see here the line in the sand. If we are going to put in an extended leg down, how am I going to know that the banks are going to have a bigger impact on the overall market? If the S&Ps lose $380. That's it. That's my indication to short. We're coming back down to 360. That'll be the next leg down. But as we're kind of grinding higher here, you kind of have to give the bulls a benefit of the doubt. Now that the SPY chart is in a little bit more deeper water than the triple Qs. Technology sector has been extremely strong. So again, if you don't trade technology, maybe right now is the time for you to start looking into technology because they are strong, right? Even though we're not making any new lows on the S&P, we've still got a lot of work to do. I really don't like the S&Ps until we get back over 400. But again, if we take a look at the small caps, the Russell 2000, again, kind of the same picture here that we're painting. If I just kind of zoom out here, multiple bottoms here between 162 and 170, again touching here, kind of bouncing off. If we do start to lose 170, we could be looking at 167 on the speculation names, and anything below 167 down to 162. But again, kind of getting off topic there. You know, the whole reason for this video is Tesla. So I'm looking for a 190 price target here, or I'm looking to lose 176, 174 and a half, and then short down into 167. Those are the two plays that I'm looking at. I'm kind of waiting for them to set up here. If you do want to kind of take an early entry and you're a type of trader who likes to build into your positions, well, then your absolute stop loss is 174. Okay, 174. Again, you're looking at around an $8 risk. Is that an amount of risk that you want to take on? Obviously, probably not, right? And the reason why you don't want to take on an $8 risk is because who wants to be down $8 in a trade? That's absolutely insane. So again, just kind of be patient, right? Wouldn't you rather put on $1, $2 worth of risk here as we get closer into the 190s and potentially close over 190s? Then you can use, 188 as a stop, which is a $2 stop here versus an $8 stop here, potentially if this goes sideways. Now, if we do close below the 174, then you can simply just use the 50-day moving average on a daily candle close as your stop as well, which is probably going to be about $1 risk. So again, if you're trying to build into a position right here, because some people do like to build into positions a little bit early, you want to use a smaller time frame, like maybe something like the 1 hour time frame if this is a shorter term swing trade. Right now we're currently trading at 182. I would say a concrete stop would be 179. So about $2 risk, $2.50 risk here, 179. Anything below 179 could touch 176. And like we said, anything below that 176 is 174, and anything below 174 is 167. So you can kind of see how the hourly chart is matching up with the daily chart. So I'm just going to kind of keep this video a no nonsense, no BS kind of approach here. As of right now, we had 3 hours ago a monster killer engulfing green candle here on Tesla, very, very strong momentum. I didn't really like the significance of this kind of pullback here. But again, if we kind of look at the overall move from where we started at, it's about a 50% retracement, right? So completely healthy here. If you look at the first hour candle here, we came from a bottom price of 176 all the way up to 186. This was a $10 move intraday, guys. So if you really look at the move, a $10 move intraday, and we only had about a $5 pullback. So it's a 50% retracement here, which is still healthy. Now, if Tesla does start to lose the 180 and 179, then we can kind of maybe thinking about, losing this 179, playing it back down into 176. But until Tesla loses that, we have to give bulls the benefit of the doubt. You will have a sneaky entry here over 184.50s into 186.50s. Maybe if you want to take a scalp for 50 cents, $1.50, you can try to kind of take that move there. But obviously your bigger move here is going to be over that 187, 186 and a half mark. And we're going to play that into 190. So again, I hope this video helps you guys learn how to day trade. If you guys want to learn exactly my strategy and how I use this supply and demand kind of zones here and use and correlate these moving averages so you can find the best potential trades, join evolutiontraders.com. You're going to get 2 video courses. You're going to get access to the online community where you can chat intraday live, and also access to one-on-one coaching if you need it. And I will see you guys all on the inside.